The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, noon till 1 p.m. My pleasure to be here. Great programming earlier on. Let's try to keep that standard up. Dow's down 122 at 21,903. S&P is down 15 at 2452. Comp index is down 50 at 6296. The VIX index is running. It's up in the 1333 area. This is a big move. 1.59 up, 13%. That is big. The E-mini you're looking at right here is minus 16. Made a peak E. Remember that a pattern that we were looking at was the Chapman wave stalk leg formation, the leg, the body, the neck, the head, which is really the beak. And the beak then concludes, and it has a really strong rally, and then you're on your own. What I said to subscribers last night, for those who came to my second webinar, the 2-webinar series, I said, I'm a little cautious. We had one person who asked about having just bought the TVIX, the short-term VIX position. I said, your timing could have been perfect because it has to work, and if it's going to work, it's going to work immediately. My thinking was last night that we had made some kind of a top based on a number of factors. I'll go through them in a minute. And that as a result, we should see some pullback, and that's what's really happened here. And if you look at the whole thing is tomorrow, there's no way that I can see 2488.50 or higher being hit in the E-minis. It'll have to be something spectacular to do that. That's going to be 50. It's a 38 point. We've seen it before, but I don't think so. The 38-point rally. I think we're making a peak F rather than an F/B in the weekly charts, and therefore I'm somewhat cautious. We made a peak F in the 120-minute chart. Let's just get this out the way because I do want to show you something. The reason why yesterday was so important, and during the show, I was discussing this. I said, right here. Now, that's the daily. I want the 100. Look, this is the Dow 120-minute chart. We had a Chapman wave 5. It's a technique that I developed over the last couple of years. On the way up, and a perfect Chapman wave 5 on the way down, which was also a trough E, trough F, a peak F on the way up to 22,176. That was the high of the 8th of August. Comes plunging down to the low that was made right here at 21,842, and that was at 3:30 in the afternoon on the 11th. And then what happens is we see this gap to the upside. And that gap to the upside started a 1, a 2, a 3, and a 4. If you do Elliott wave, you'll never get this reading. This is not Elliott wave. This is Chapman wave. It's something completely different. And what happened was that the rally that began, that was because the VIX started to really crater over the weekend, Sunday night into Monday. Excuse me. What happened is we got a 1, 2, 3, 4, 5 Chapman wave peak C. I said last night, I think the C is going to be a failure pattern. And what I said to subscribers to my opening call is yesterday we wanted to see a rally above 22,038. That would start leg C, but it would also start Chapman wave 5. If that reverses sharply, which is done, I can now put a down arrow, although I can't because it's a C. It'll be a C minus. I have to put a plus sign just to say, hey, that's where the reversal took place. And now we're in 1 to the downside. This is still just 1 to the downside. Very sharp move. If you're looking, this is leg A in the 120-minute chart where I've got the MACD crossing negative and the stochastic way down at 59%. So far, all the little ducks are in order. It's one of the reasons why we stayed in our short position on the Dow. We added some short positions today. To tell you the truth, I added the positions purely on technicals, because if I left it just to my emotion, I would have said, these things are doing really well. They could go a little higher, but purely technically, I'll explain in a minute. what we're looking at in the daily chart is that there's this H pattern, which I expect is going to unfold as the 21,842 level is going to be tested in the next 2 days. And that's suggesting that the doji candle, that's another reason why I felt that this was probably a turning point. Where I get tiny little doji candles, I always look at them and I think, okay, that means that the market is either in a situation, whatever price, whatever tradable we're looking at, to continue the next move up, and that becomes like a way station where you can get a one-to-one to the upside from this doji to the previous trough or another doji prior. Or, and this is really the case, I had drawn in for subscribers earlier in the week this pattern of the lightning bolt going from the peak D high in the Dow at 22,179 on the 8th of August down to the 20 period moving average, the red moving average right here, rallying up and then coming back down with the anticipation that it would break the left side low bar. We'll see. Days young, weeks young. We've still got tomorrow to go. But this gap is very important. The gap with the low of 21,861 and a high of 21,841. So there's a 20-point gap right there that's still left over, and we're going to be seeing if that gets filled at some point over the coming weeks. But in the meantime, we've almost filled 2 gaps. The third gap down is really going to be key. Now, what we're looking at is, let me get back to our nitty-gritties. Let me run these down. Look, the S&P, SPX.X. The S&P, sharp decline from that doji candle of yesterday. 2490.87 is the high of the 8th of August. MACD was very poor. That's what we spoke about last night in my webinar. I covered exactly what I wanted to do in the first webinar, and I covered exactly what I wanted to do in the second webinar. I discussed in detail what we were looking at in the various indices, the different sectors, and why I was beginning to think that we could continue this rotational correction for a while longer. So the SPX becomes a breakdown if it starts to trade in the 2437s. It's at 2449, still a long way to go. I'm saying that's the level that the weekly chart will really suggest that there's a lot more weakness to come. And peak E probably in the weekly chart. I'm looking at a leg D still very strong in the monthly chart. Let's go to the QQQ series. Oops, I didn't have my timer on. Okay. QQQ series 142.53 down sharply. And one of the reasons I think is that the SMH failed at that resistance line, that really strong resistance line with the doji candle yesterday. And that was a hint to say, maybe it's not going to break down, but there's some vulnerability in the SMHs, the semiconductor index, the market vectors, ETF. It led on the way up. Look, it led the QQQs on the way up. And then it led the QQQs on the way down into that low that was made the 10th and 11th of August. But it failed to make failed in the recovery. And that says it should drag the QQQ down. It should drag the XLK down. Is what we spent a lot of time on yesterday. XLK making a probable peak E at this particular point. Still acting really well. The weekly chart is not a single sign in the price. A lot of signs in the MACD deflecting lower. So Basil Chapman, Tiger Technicians Hour. Let's do the IWM. As I'm going out, IWM Russell 2000 still very weak. We'll be right back. Dow's down 132. S&P down 8.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. We're back in the Dow's down 138, S&P's down 19. Now this is going to be very important. See, the IYT is the transportation index, the iShares transportation average ETF. Peak D probably, well, leg D in the monthly. It hasn't made a peak yet, but it is probably a G rather than a B in the weekly chart. I'm watching this really closely because the transportation average worked well with the Dow going to all-time highs, and then it failed this last time to rally strongly. And in fact, it's been very weak. And crude oil, look, crude oil is way down, and it's down. It's up to 11 cents today, but it's way down from the 50 area that it was at. Is at 46.90. And you would have thought that the XAL, which is the airline index, would have taken that opportunity to scream to the upside, and it's down $1.63 at 108.66. So when we were going through this last night in the in my webinar, what I wanted to really focus on was the crude oil had pulled back, and yet the transportations, and I included look, CSX, which is the rails, had a bounce, also pulling back sharply. I'm kind of concerned that key figures that act well during good periods are not acting well, and it's kind of a harbinger. Yes, we can look at crude oil, high-grade copper, but that is a much bigger picture, which I think is right now making a leg E and a potential peak E at this resistance. See this four times hit trend line right here? It's had a fantastic run, but it's E in the daily. MACD is starting to turn down. Stochastic's way down at 62%. That's not confirming this big spike yesterday. And it's a leg D in the weekly, and it's a leg D in the monthly. And I'm looking at this and I'm saying, I love the fact that high-grade copper had acted so well. I have to watch it closely, because at 2.939, if at any point copper breaks this key support right here, that's a Chapman Wave stalk day formation. Kind of partially, I put it in because it had the sideways pattern. But most importantly, if at any point it takes out yesterday's low of 2.876, and then cannot rally above the 9-period moving average of 2.91 to maybe 2.915, and instead takes out over the next 2 weeks this low right here on the 28th of July, the low of 2.841. That's not going to be a good sign. And then we had a quick look. We looked at the housing, HGX. HGX had a bounce. It's pulling back. But my concern here is the weekly chart has made a peak E. You remember, we always look at this. This is the yield chart. I want this one right here. Whoops. I want this one right behind it. There it is. Here. This is UUP and gold. Oh, maybe I'll talk about that in a minute. Let me just put that aside right now. I'm going to put it right over here. And I want this particular chart right there. It is. Okay. So here we go. So this is the one that I wanted to look at, which is the Wood iShares Global Timber and Forestry ETF. It's holding quite nicely. It's down 14 cents, but it has made a peak D, and it's within the channel. It's gone to the top of the channel. It's now going sideways, going to the bottom of the channel, and I'm watching it closely at 62.25. If it takes out 50, if it closes under 59 in the next week and a half, at any point, 2 weeks. I'm going to make it 2 weeks, 2 full weeks, next week and the following week. That's going to be a big negative. And the same thing with the HGX, the Philadelphia Housing Sector Index. I think that's a problem, and I think that's already on its way down. And at 280, if at any point it takes out the 276, I think I said 270. Yeah, if it closes in the 275s at any point, any day in the next week and a half, 2 weeks, that's going to suggest that the home builders are in a bit of a quandary here as to the buying and selling, because I think that what it's saying is that the housing market is just starting to slow down sales if it does that. But in the meantime, it's holding quite well. I'm not going to say anything until it actually breaks that. And look, rates are, the 30-year T-bond rate is down 12 cents at 27.96. They're all down. Look, 30-year T-note yield, T-bond, 10-year T-note, and 5-year T-note are all down here. So this is a very important moment. If you hear a jackhammer outside, that's that song, Jackhammer. It should pass in time. But let's just go to the DXY. Sorry about that. A little work going on outside, and every once in a while, you got to do these things with a house. 93.61 is the dollar. At 93.61, it's just within a trading band, a very narrow trading band in the base. And the moment that you've got a break on the upside of 94.75 to 95.20, you'll start to see the dollar increase in value. At this particular point, I think it's just kind of stuck. EUR, USD, the euro dollar is just kind of stuck. It's in a range bound. I'll explain that if the euro dollar currency pair, which I think it must be a peak G in the daily, leg F, well, probably a peak F/B in the weekly, I think there's a range now between 1.158 and 1. I'd even say a new recovery high. So you could even go slightly higher. So I'm looking at this and I'm saying, okay, the 200-period exponential moving average in the weekly and the 9-period in the weekly are really saying we are fantastic support. We might not go much higher, we might not go much lower, but we're going to be stuck in this range. And the weekly chart says that spectacular leg A. At some point, it will give back some of that A. I don't know if it's going to be now, but even if it's now, I see 1.52 as so far being very strong support for the euro dollar. Let's look at the USD JPY currency. There you go. And that's just trying, like the dollar, it's trying to get off the ground. I've looked at I'm going to do a lot more work. Next week, we'll start doing a little more work on these currencies because the patterns are absolutely fabulous in terms of analysis. You've got the lowercase h that goes to lowercase m, and we will, not a machine gun for the bulls. Nope. The 200-period moving average at 108.80 for the dollar, Japanese yen, currency pair. That's going to be key. And there's a whole theory that can go with that. I don't want to take time right now, even though it's Technical Friday. Just spent so much time preparing for the webinar last night, looking at all these different indexes and deciphering them and deciding what we wanted to do at this particular time, that my head is a little bit, I wouldn't say it's spinning, but I will say that I want to go back to the gold right now. Look, gold is holding very well. It is way above the 200-period exponential moving average in the daily chart. The MACD is at a level that says there is support based on the fast-moving average, but there's also a suggestion that at some point the gold wants to come back to test the 1258, 1262 to 1258 level, but it might need one more test of the left side high that we've been discussing for so long, so in the weekly chart you can get your leg deep, and there will be a move above the high of the 6th of June. Drilling off the chair. This is the dental chair. So sorry, I should have planned that drilling a little better, but you know what? As long as you can hear my voice, I'm around. The drilling might stop and start, but we're going to be doing this. Second career jackhammering. Yep, I got a hammer. I'll be right back. Dow's now down 145, and S&P's down 20.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I had a chuckle because someone I haven't heard from for a long time who used to look at TGB, Taseko Mines, every minute of the day, way back. This was, let me see now, it must have been when Not 2009. It was even before, I think, 2009. Yeah, I think, yeah, well, it was, maybe it was 2009. We just kept seeing going higher, and I went from the went from 55 cents to $7.23. So it's been on its way down. It's had some bumps in the way. But most importantly, it went all the way down to 0.23. It's trading now at 1.65. It was on my list for my subscribers. We were going to buy it. Then I decided, you know what, I won't do anything with it. TGB. And then it had quite a bit of a pullback. It went down from the 1.66 area to the 1.42. That's a big percentage, folks, 160 to 140. So, and now it's right back. It had a height today of 1.70, trading at 1.65. So the question is, TGB hit 52-week high. How does it look? Thanks, Dan. So, Dan, this is a real tough one for me, because as I'm looking at the monthly chart, it's just getting stronger and stronger. If I look at the weekly chart, it's gone through the left side high of peak F. That was on the 17th of February of this year, 1.63, pulls back to the $1 area, and then makes a cup formation and goes in leg C. It smashes through the left side high of 1.63. Today's high has been 1.70. So I shouldn't say smash, but it really it slices through in leg C, and I have to give it the benefit of the doubt. The MACD is good, stochastics at 91%. I think that it could chop, but in fact it should chop and go higher to a leg D, and that gives it another week or two, and that's suggesting that high-grade copper could hold even longer, and it's really quite important, because if you look at SCCO, is that what? Haven't looked at it for a while. Southern Copper, that spike yesterday shouldn't have happened. It went to a peak D and then an E, pulled back very sharply, and it could have done it, but in one day to spike like that from the 37s to the 40s, that's a really big move. So all I'm suggesting to you is that, yes, I know, I'm pretty sure you are long. I'm just going to say, Dan, stay long. I normally would say at this particular point, take a little bit off, just part of the insurance, because it just broke a very important resistance. If it really needs, for me, it needs to close above 1.6, it's at 1.65, and it needs to close above the left side high of 1.67. For me to have a lot more comfort, rather than saying it's a new A. I'm still keeping it as a leg F. So I'm just going to say to you, normally I would recommend just taking a little bit off when you break into these new recovery highs. That's the two ways of looking at it. Either it breaks to a new recovery high and you say, that is fantastic, I'm doubling up, or I'm adding, or I'm going to make a pyramid, upside down pyramid. I want to have more and more and more as it goes higher. Or you say, I want less and less and less as it goes higher. In this particular instance, because of the market scenario, I'm not sure if copper can independently go higher. And therefore, I'm going to say, Dan, you can do one of two things. At 165, you can take just a little bit off. It's like money management. It's just saying, you know what, I've done well. I'll put that back, and you can name a price. You can even look, say, 165. What's the big deal? If it goes much lower, but you put it in at 142, 144 area where it was just 3 days ago, if it goes lower from there, you're still 20 cents to the good of where it would have been if right here at 165. So I'm saying take a little bit off, but actually what I want you to do is, today's Thursday, email me again Monday. I want to look at the market. I want to look at it in context of what the market's doing on Monday. And then I might say to you, you know what, Dan, I love its action. I'm going to now say to you, add, or I don't like the action. I'm going to say subtract a little bit. But right now, one of two things. Don't do anything. Put a stop in at 160 if you stop on a little bit. Or just say to yourself, you know, 5 cents, why should I give away 5 cents? I'm going to take a little bit off right now, and I'm planning to put that back if conditions are still very good. I'm a little concerned that the MACD's weakened and the stochastics weakened in the daily, but I'm really pleased to see that the weekly and monthly, and therefore that's the reason why I'm not saying to do anything other than just in terms of money management, you might want to take a little bit off. This is very good action. It's going to really take a move to 130 to deteriorate the weekly charts technicals. Actually, probably under 130. So far, very good. Next question was, Old Gringo wants to know, it sounds like you're Sounds like in a dentist chair. Yep. And now he's quieting down, but it might start up again at any minute. That's what happens when you've got a well-built abode, and it needs some work. Takes a jackhammer to get it loose. Sarah wanted to know about Boeing. Yeah, let's just look at Boeing. So Boeing right now is trading at 236, down 149, still acting extremely well, but I think it's starting to deteriorate in the daily technicals. The weekly technicals are holding it very well. That makes this pullback here, just at least for now, we're calling it some kind of a digestive phase. Let's just watch it closely. And what I do want to say is that if I put it together with my GE Dow Quartet, look, GE is horrible. Down again today. It's just horrible. IBM, lousy at 142, down just 17 cents, but really is not going anywhere yet. Triple M, pulling back, but holding quite nicely. UTX had a tremendous move up, and now it's just making lower lows and lower highs. So 3 out of the 4, all 4 are acting very poorly. 3 out of the 4 right now are still very weak, and it's only Triple M that has, at least off the base, it's got a little bit of a high-level consolidation. So I'm just saying that's part of the bellwether, the benchmarks that I'm looking at to say all's not well in the land of the Dow. And if you, as Sarah wants to know about ITA, I don't ever look at ITA, do I? ITA. Oh, the Italian iShares. Oh, I used to have this all notated. This is Italy. Oh, no, this is, U.S. Aerospace and Defense. Oh, ITA. I forgot all about that. Let me write it down. ITA, and I'll circle it. Yeah, I'll do a little work on this, but it is pulling back. It's got the arch pattern in the daily. The weekly is holding beautifully at this point at 167. 163, if it closes under 163, then there's a problem. And the monthly chart is still very strong. But if I go to the PPA is really what I do. So PPA is the ProShares Aerospace and Defense. It's exactly the same chart formation, and except I've got it notated because it is one that I follow very closely, and it is the Aerospace and Defense ETF, and I believe the ProShares, I'm not sure if it's 2, I think it's not 3 times, but 2 times the one that you mentioned, ITA. So I've got a peak G in the daily, I've got an F in the weekly, and a D in the monthly. So I think it's, due for, look, the technicals are suggesting it needs a little bit of a pullback in time, and price, it could be 3 to 5% at this particular point. I'd be comfortable with that. If it's deeper than that, we're going to have to do another study. Now, another question I had was, so Timson wants to know about VEEV. For those of you who follow my work, you know that I've shown this as a topping stock a while back. It went to 68.07 at peak D in the, is that D? Yes, D in the weekly chart on the week of the 9th of June, and it's E in the monthly. It's Viva Systems, Cloud Pharma, Biotech. We'll be back, and we'll look at it straight after this break. Basil Chapman, Tyco Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes, Timson says, I am short VEEV at 64.39. It's trading 64.75. How does it look and where might I put a good stop? I'm going to make it real simple. Yes, the left side high in the daily of Viva Systems, Cloud Pharmaceutical, Biotech at 66.09 from the 24th isn't the all-time high, but I wouldn't let it get away from me. In fact, the fact that it's up $1 right now, $1.04 at 64.81. It's suggesting that the rectangle, I have trouble with the shorts in the rectangle because you need to look at a shorter time frame and see if there's a 120-minute chart. Let me just look at it. 120-minute chart to a D. So it goes A, B. It's in leg C. Ooh, could do another one. I hope this is, let me just see if there's one. 61.81, 61.92, 61. There you go. Lucky, lucky, lucky. So this is A. This is leg D. Well, I hope it's going to turn out to be lucky. So A, B, C, D. You know what? If you make it a tight stop, you can always come back in. So I'm just going to make it really simple. I think your entry point is actually quite good. You didn't know it would actually go higher than when you went in. I mean, this is the way it is with these stocks, especially anything to do with the biopharma. The MACD did turn up and the stochastic is rallying, but from the pattern that I'm looking at, I would say quite simply that if it takes out today's high of 65.45, so 45 is just over a point from your entry, I would be covering, or at least cover part of it. Just, you can always get back in if it starts to fail. And I'll tell you what I need. I need maybe 3 days. I need Tuesday. I need probably Monday afternoon to Tuesday. And that's going to tell me that if it's already given, if the market continues weak, if it's held up today, but then it starts to pull back Friday into Monday, and at any point it gets even close to 63.27, 64, you're already in the money. That's going to suggest to me this is a single leg A-type failure pattern, and the MACD should start to pull back, and the stochastic will pull back. And then you got your arch, and this is really the pattern. You're correct. I'm sure you were looking at this and thinking, you know, there's some kind of an arch formation. You are correct. but that'll change if there's one more high to A, B, C, to a leg D, and then it might be ready. But I still wouldn't give it any room. Make it real simple. Above today's high, you're out. Overnight, if there's a rally this afternoon and it gets anywhere to the 64.40 or 65.10 area, just below the high that was made today, I'm not sure I would hold it overnight unless the market is very weak at the close, which I think it's going to be. If it's very weak at the close, then you can hold it overnight. But I don't know how you're going to ameliorate any kind of gap in the morning to the upside, because something's happening here that is quite positive since it gapped up 5 to 6 days ago, and now it's continued higher. So it's just a little early probably in the cycle. But in the meantime, that's what I'd use as a stop. Next question was Cisco. Cisco, which had news last night, down $1.32, made a peak E yesterday. Daily, it's already at a G, alternate count G in the weekly chart. Monthly chart is right there in a C. This is very unusual for stocks to make. Yep, all-time high. Is this an all-time high or recovery high? Because this was one of the fancy stocks of 2000. Oh, no. There it is. In the year 2000, it makes a peak D in March with the entire the S&P, the semis, etc. at 82 round number. Oh, I love those round numbers at the top there. 82, and it might have been split afterwards, but anyway, it's a round number. It had a round number high in the very next month. There's a monthly chart. It had a round number 77. So it has 82 and then 77. Wow, if that doesn't lock in a sharp move to the downside. Well, it was a sharp move. It went from the 88s down to, 82 down to 8. Oh, 90% correction. Okay, so it's a little problem, and now it's coming back, and it's now only halfway in the 30s. It hit 32, it hit 30, 34. So yeah, be careful. Cisco is not looking good. It's another reason that I think that the Qs might be a little bit vulnerable here. So that was. So there are a lot of puts on the IWM. Yeah, thank you for that information. At 136, huh? 136. Yeah, right. I think a little bit lower down. Yeah, that's 135.49 is the 200-period exponential moving average. Now, there are a couple of things I need to just go through here. I'm pretty sure I won't be here tomorrow. Be back on Monday. So just this is what I wanted to look at. I wanted to do this before I have to quickly wrap up the program, as I look at the clock and see that, in fact, time's running out. So let me do this. With the question about Cisco, there was also Apple. And look, Apple is pulling back after making a FGBC. Oh, man, there's always one in the crowd that just doesn't behave properly. Apple, what's the matter with you? Apple's still showing strength, although it's down $2 today, 158.96. Why? Because however I count it, this is A, B. You can't, after G, you don't get H's. It has to be a C. Oh, my, and I haven't got an alternate count or anything. Yep, that's the way it is. This is going to have to be a C, and we've seen one or two, not many, but one or two stocks actually fail, like the QQQs, at C. That's really unusual, but now we're seeing a little bit more of it because the power of the tide is much greater than the shorter-term trades. So that is Cisco, Microsoft, MSFF, FT, trading at 92, down 73 cents. Yeah, this is it. This is a C, an alternate G/C. They're all holding quite well here. And I'm going to talk about it in terms of this is still a high-level consolidation. And that's how we've tried to set this up. We've tried to identify the sectors, the two sectors that I think are possibly the weakest. We went short via different instruments. And that's how we're still short the Dow, and just going step by step. I didn't want to do overly short because we still got some long positions, and they still kind of holding very nicely. So we'll do everything step by step. Now I had a question about the VIX, and that was going to be in my next section. Well, I'll start it now. P wants to know about the VIX. The VIX is up at 13.98. What I said in my webinar last night was if it's going to work, the TVIX, and this is the TVIX here, this is double the VIX index on the long side, and it closed yesterday in this area in the 16 something, what was that? It closed at 1687, And this morning was up a little bit at the open, before the open, when I sent out my newsletter at 8:35. And I said, this could very well be the time that it moves. And it's got to move, and it's got to move quickly, and it's got to hold the gain. So, yes, that's what it's doing. And what it's saying is that if on Friday, remember, we've seen this often, the Thursday looks ugly in the VIX, and Friday just wipes out any gains. It just closes below the 9 EMA, the 200 EMA, the 20 EMA, whatever it is. It closes very weakly. And what I'm looking at here is that this VIX, if by tomorrow afternoon, let me go back to the VIX instead of the TVIX. If the VIX is trading now at 14, closes tomorrow anywhere above 14 or higher, but especially I'm going to say if it closes in the 1480 to 1530 area, there's a chance that on Monday we pop to the upside. So North Korea was the anxiety on August the 11th. Today is the 17th, 18, 19, 20. On the 20th to the 21st, we might find that it's not North Korea. It is actually now we're getting the market as vulnerable.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
So we're back. So we spoke about the VIX. There are a couple of things that we need to look at, and it's very important. Going into Friday, going into Sunday night, and Monday. This is what we need to look at. Look, gold in this situation where there's a market uncertainty, it's up 8 at 12.91. Theoretically, for those of us who have watched gold for years and years, remember I'm from South Africa, so I grew up with gold mines and all that stuff. So I've always followed gold. Now, I don't follow it like Tom. Tom O'Brien is really an expert in that he knows the companies. He knows really inside out. He knows all about the gold and gold miners and the silver and the different metals. I'm just talking about the price. And I've looked at gold for a long, long time. And the monthly chart says to me, something is not quite right yet in the monthly chart. It's just had this huge consolidation, making almost like a lower V-shaped pattern, sideways V-shaped triangle pattern, and it hasn't really broken to the upside. If it's going to do anything, the peak C1, C2 in the weekly chart, for those of you who know my work, you know about these peaks C1 and C2 is the fake D. There's always a chance that you're still going to get that D, and then you can pull back again. So on the shorter term, I would anticipate if this market, which is really cascading now, I think it's the total uncertainty. Remember, I spoke about this. One of the reasons why we went short the Dow was because I was looking at this and I said, I think in political terms, political economic terms, that this is going to be the most difficult period for the president. It just seems to me that that's what's happening now. That's what I'd said. And I think this is what we're looking at. I'm not sure about North Korea and all these other things. I think that it's looking like it's going to be very difficult for him to accomplish things, and he's going to have to pull a rabbit out of the hat later on. And I don't think it's right now. He's going to try, but I don't think it's until later on. So there's a lot of things with the march coming up in Boston Saturday. This is a period fraught with a bunch of stuff that actually now is impacting economic decisions. So maybe that's what we're looking at, and that's really what I wanted to say. That the market right now seems to be much more vulnerable to news events, and we're watching it close. Have a wonderful weekend. If I'm not here tomorrow, have a great weekend. I'll try to be, but if I'm not, I'll see you on Monday. And thanks to those who attended my webinars. I really appreciate it. Have a great day. Stay tuned for Steve Rhodes and all the other great
Tom O'Brien's
hosts.
weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.